lot of firms reporting that they are in poor or fair financial condition. This is even more pronounced for firms owned by people of color and small firms. I will note that overall, these percentages were pretty consistent with what we saw in 2020, so not major changes here. The share for Hispanic-owned firms increased from 2020, but the rest of the numbers were pretty consistent with what we saw last year. Next slide. In terms of financial challenges, across the board, we have seen more firms reporting a financial challenge in 2021 than in 2020. Again, not super surprising. And then we can also see that for firms owned by people of color, those the incidence of reporting financial challenges is consistently higher. Next slide, please. In terms of operating expenses, again, I think we all know a lot of small businesses are struggling with a variety of different types of financial challenges, but the most common one for firms owned by people of color was paying operating expenses. So basic things like rent, wages, inventory. You can see the disparity between white-owned firms and firms owned by people of color there. Next slide. So we also asked questions in the survey about pandemic-related financial assistance. So that started last year, the first survey during COVID, and continued this year. And a couple of things we found is that, as I mentioned, overall, fewer firms sought any kind of pandemic aid in 2021. I think the share, I believe, was 91% of firms that were surveyed last year sought some type of financial aid for pandemic, and it was down to 77 this year, so still high, but a significant decrease. And of those firms that did seek pandemic aid, the EIDL was the most commonly sought source of financing for firms owned by people of color. Next slide, please. Great. And then PPP, again, there was lower interest in PPP, lower demand for PPP this year, but still significant. And of the firms that applied for PPP, white-owned firms were more likely than firms owned by people of color to receive all of the financing. And it's a pretty significant disparity, even in, this is 2021, even after a lot of this, came to the fore and there were, steps taken to try and address it. You can still see, 70% of white-owned firms got all of the funding they requested for PPP, and drops down to 31% for black-owned firms. So still some big gaps there. Next slide, please. So this slide shows us a universe of firms, and this is shifting to, so that was pandemic-related financial assistance. We also asked in the survey about traditional financing, so going to a bank, getting a loan for a variety of different things. So this is the universe of firms that said they did not apply for traditional financing of any kind. And we asked them why. So you can see here, for white-owned firms, 50% of them said we didn't apply for financing because we didn't need it. We had sufficient financing. Just 13% of black-owned firms didn't apply because they had sufficient financing, meaning they felt like they had a need but didn't seek it. And if you look at the breakdown of the reasons, 40%, 4 in 10 of those applicants did not apply because they felt like they weren't going to get approved. They were discouraged from applying for a variety of reasons. So again, just still showing that there are some significant gaps. Next slide, please. And then this is a little hard to see, but basically one big finding we saw this year was that overall, across all employer firms, regardless of race or ethnicity of owner, the share of firms that received all of the traditional financing that they sought was much lower. So you can see in 2019, 51% of surveyed firms across the country said when they applied to a bank or a financial institution, they got everything they asked for. In 2021, that was down to 31%. So that's a big drop. And you can see the breakdown below, those percentages are even lower for firms that are owned by people of color. There's a couple of things that could be driving that decrease. It could be that firms are in less strong financial condition as a whole. And so when you go in for a loan, your financials don't look as good because of the past few years. And so banks are less likely to approve. It could be that a lot more of the funding requests are for just operating expenses, just to keep your lights on, keeps the door open, as opposed to growth, expansion, buying a new asset, which sometimes, which can be more likely to be approved. So we're not sure quite what's going on here, but this is definitely a trend that we're seeing, not just in firms owned by people of color, but across the board, and that's something to watch. Next slide, please. And I'm sorry, this is actually, it should be 2021, but again, just another cut of the data showing that, Black and Hispanic-owned firms that had, this is self-reported credit risk, but that had low credit risk, were equally as likely as white-owned firms that considered themselves high credit risk to get all the funding they needed. I think just in summary, again, these are showing what many of you already know, which is that there continues to be, and the survey has also shown this consistently over the years, that there's a disparity in terms of access to credit, and that firms owned by people of color continue to have more challenges accessing the credit they need to navigate the financial challenges they're facing. And I think I'm going to turn it over to Tracy and take.
Want to take any questions for the first?
Yeah, I mean, we can also any questions, anything that comes up. Yes.
Thank you. I have a question about the
Thank you. I'm interested in research because I'm doing my own survey independently, so I'm very interested. One of the questions about the discouragement, 40%. Do you know the reasons why? Because of my own experience with entrepreneurs of color and immigrant entrepreneurs, because they don't know the process, and then they, especially maybe immigrant entrepreneurs, don't know the language possibly to actually fill out the PPP or EIDL application. So, do you know the reasons why?
I think it's yes. I will say that all of that information is in the report. So at the end of the slide deck, there are links to the actual reports themselves, the reports that have all of that background, that have the specifics on what's in the questions and responses. So all that needs, I would refer you to that. But I think it's a mix of things. I think it's some of it is distrust, some of it is that the application didn't make sense, didn't know. Didn't know the process. I think it's probably a combination of the factors that you would expect. Anything else? Yes.
Yeah, I was just curious. I mean, taking all this data, you're with the Federal Reserve, am I right? So how do you communicate to institutions out there saying, like, are you taking this data into account, and what are you doing to address these disparities that obviously are huge across the board?
Right, yes, and that's a great question, and that is very much, I think that the first thing is that that's why we feel like the survey is so important, and we continue to do it. The more data we can get, the stronger the case we can make for these gaps. I think we try to share this data out as broad an audience as possible. We share it with our bank partners. We have regional executives at all of the Federal Reserve branches that work with businesses, financial institutions in the community. We share this data with them, and they do presentations to their constituents. So we are making sure this is getting in front of mainstream financial institutions, businesses. We have a government relations team that takes this to the Hill and is talking to policymakers. So it's really trying to, this idea that what gets measured gets changed, right? That capturing this data and continuing to show that there are these disparities is really education and trying to make sure that,
Just a quick follow-up. So is there a report card for these institutions where you can hold their feet to the fire and say, hey, man, you guys stink? I mean, and all these various variables, you're terrible.
I mean, others have, aside from CRA, I mean, banks get CRA ratings, right, an examination.
Yeah, that's what I was talking about.
So this, looking at all of these factors as part of a CRA examination. I'm not an examiner, so can't speak to exactly how that works, but CRA is one of the ways that banks get held accountable. I think from a small business perspective, I'm not aware of any particular, I mean, I know there are new regulations coming around collecting data. I think one of the challenges is that there is not a required collection of small business data, right, for financial institutions, and so that's part of why we feel like this survey is really important. But there is